Hi, everybody. Welcome. My name is Amber Hay, and I am the Public Service Loan Forgiveness Advocate. I'm joined today by a few colleagues here to answer questions about public service loan forgiveness. At this time, I'm going to ask my colleagues to go ahead and introduce themselves in the order listed on the slide. So Jessica, go ahead.
Thanks, Amber. Hi, everyone. My name is Jessica Manfredi. I am Washington State Student Loan Advocate, and I work with Amber within our Office of the Student Loan Advocate. And I'm going to go ahead and pass it over to Katie so they can introduce themselves.
Thanks so much, Jessica and Amber. I'm Katie Casares. I use they, them pronouns, and I'm with OFM State HR. I'm a planning and strategy specialist. And happy to be with you all here today. I will pass it over to Rachel.
Hi, everyone. My name is Rachel Gittleman. I use she, her pronouns, and I work in the Ombudsman's group at Federal Student Aid. I work in our stakeholder engagement section, and I lead our state work. So I work with Jessica and Amber and Katie and advocates from all of the other states in the country as well. And I'm also excited to be here with all of you today.
Great, thank you. Today, we're here to answer all of your lingering questions about the Public Service Loan Forgiveness Program. This session kind of came about after we observed that we often run out of time, right, to answer all the questions that come up during our regular PSLF webinars. So we're excited to dive into those questions. First, we're going to cover just a few housekeeping items and ground rules, and then we have about 4 kind of predetermined frequently asked questions that we anticipated, and then we'll start opening up to audience questions. All right. So in terms of housekeeping, this presentation is being recorded and will be posted onto the Student Loan Advocate webpage. We will provide our slides for your reference following the presentation so that you can have access to all of the links. Please note it might take a week or so to get those materials posted onto our website and emailed out to registrants. The chat function is disabled for participants and will be used by panelists to share links and resources. Participants are also on mute, so please submit your questions via the question and answers section down in Zoom. And we do have live closed captions that you can enable on your end on your Zoom icons. Okay, so as I just noted, you'll enter your questions using the Q&A function on Zoom. Please keep questions general. Do not include any personally identifiable information since this is a public forum and is being recorded. Personally identifiable information are things like names, account numbers, birth dates, social security numbers, contact information. You know, just be conscientious, essentially. And think about how you can phrase your questions to make it more general or applicable to other folks as well. You can submit specific questions or complaints about your individual loan situation to the Student Loan Advocate's office. We'll go ahead and drop a link in the chat to that submission form. If you do submit a form with us, please make sure that you select the student questions and complaints form specifically. And actually, that should say student loan questions and complaints. Right now, our response time to individual questions and complaints is around 4 to 6 weeks. So just kind of keep that in mind. As questions start coming in through the Q&A, we urge folks to review those questions as well and upvote the questions that you would most like to hear the answer to. We will prioritize the highest upvoted questions, but of course, we're also going to attempt to answer all of the questions that come in. To upvote questions, you'll click the little thumbs up icon underneath the questions you most want to see answered as demonstrated on this slide. We'll also put this back up once we get through our first initial frequently asked questions for your reference. All right, Jessica, I think you're up to take it away.
Yes, thank you, Amber. So we're not going to spend a lot of time here today showing slides to you, but there are a few questions that we get every time we have a webinar. So we just want to make sure that we cover those questions with you today. So the first question that we typically get, which is a very general question, is what are the general requirements for someone to qualify for public service loan forgiveness, right? So in general, there's 4 different requirements, right? You need to make 120 qualifying payments, which is approximately 10 years, while on an eligible repayment plan, like an income-driven repayment plan, that is also known as IDR. These payments must be made on a direct loan. And if for some reason you don't have a direct loan, you do have to consolidate those loans into a direct loan in order to make them eligible. And we're going to talk about this a little bit more in the future slide. And then these payments have to be made while you're working an average of at least 30 hours per week on a qualifying employer, such as a U.S. federal, state, local, or tribal government, or a qualifying nonprofit organization. And you need to make sure that you're still employed at that qualifying employer when you make your last 120 qualifying payment and submit that last PSLF form. So those are the 4 main requirements to get PSLF. Next, since I was talking about income-driven repayment plans, one question that you may have is like, I have been working in the public sector for some time, but I haven't been in an income-driven repayment plan, but I've been making payments on my loan, right? What about people that are in that situation? What should they do? Well, due to a special limited time opportunity that is called the IDR payment count adjustment, it's also referred to as the payment count adjustment, right? If you go on the Federal Student Aid website, that's what they refer it to. You'll be able to receive income-driven repayment credit for all periods you have spent in repayment, as well as certain periods of forbearance and deferment. And you can learn more about this adjustment by visiting the Federal Student Aid website, and I'll have one of my colleagues post a link for that for you in the chat if you want to learn more. And if you were employed at a qualifying public sector employer, during those periods that are going to be added to your account, right, as IDR payments, due to this adjustment, you will also have the opportunity to get those payments to count as PSLF qualifying payments. In order for you to get that credit, you will need to certify the employment for those periods, right, submit your PSLF form. And we're going to go over that process again in a future slide. And a very important reminder is that while you're going to, as a result of the adjustment, you may get retroactive IDR and potentially PSLF credit, right? You will need to sign up for an IDR, an income-driven repayment plan going forward in order to continue accruing PSLF qualifying payments. This means that if you're not on an income-driven repayment plan right now, you will want to sign up as soon as possible on the studentaid.gov website. And once again, I'll have one of my colleagues post a link to the IDR application in the chat in case you want to complete that. And then finally, right, this is very important. If you currently have any FFEL, so Perkins or HUE loans, you have to apply to consolidate these loans into a direct loan before June 30th, 2024, so this weekend, right, to fully benefit from this adjustment. Again, if you have any FFEL, Perkins, or HUE loans, you want to make sure that you consolidate those loans in order to benefit from this adjustment. And you can check if you have any of those loans, once again, on your studentaid.gov account. And I'll have one of my colleagues post a link to where you can log in on studentaid.gov, and as well as the consolidation application in case you find out that you do in fact need to consolidate to benefit. And I'll go ahead and pass it over to Katie.
Awesome. Thanks, Jessica. So at a high level, the reasons to submit a PSLF form are to certify periods of eligible employment, also to update your number of qualifying payments and apply for forgiveness after you meet those requirements. So the way that you apply for PSLF, we highly recommend using the PSLF help tool, which I believe Amber will post a link to in the chat shortly. The reason to use the PSLF help tool is to complete and electronically submit a PSLF form on studentaid.gov. This allows you to complete and digitally sign the form and then send the form to your employers for their digital signature. And then once all those signatures are received, the PSLF Help Tool submits your form to processing with federal student aid. If you do need to submit a manual PDF or paper form, you can mail it to the U.S. Department of Education. Their PO box is listed on the slide. PO box 30010 in Greenville, Texas 75403. You can also fax in your PSLF form. We'll get into this in a later slide, but reasons you may need to submit a manual PSLF form would be for reasons like if you can't get your employer to certify your employment, but again, we'll likely get into that later. And now I will pass it over to Rachel.
Hi. Yes, so one of the questions we get a lot is who manages the PSLF program? Right now, and I know we've gotten this question a couple of times in the chat as well. We are undergoing a transition of our databases and our websites. We are launching a new system that is expected to launch next month. And because of that, some folks, there has been a pause in public service loan forgiveness processing, and some folks also may have seen their loans transfer. This summer, next month, it's expected, the specialty programs like PSLF will be moving away from servicers and automated processing will be introduced. Now, I know that's a little bit confusing, but basically what this means is that in the future, as early as next month, you will be able to submit your PSLF forms on studentaid.gov. You'll be able to check your qualifying payment count on studentaid.gov. And then you'll also be able to call a single contact center or, access a single contact center through FSA's contact information. So because of this transition, we have paused processing of any PSLF forms for the last couple of months. So if you submitted your form in the last couple of months, don't worry. It will get processed as soon as we turn that processing back on next month. And then you'll hopefully see your accounts updated later this summer, early fall. The other question that we've gotten a couple of times in the chat that I'll just answer now is that a lot of accounts have been put in an administrative forbearance recently. I know that people have probably realized that we've recently returned all 40 million borrower accounts to repayment. And because of that, there have been administrative forbearances applied to accounts due to servicer processing issues during the last few months. A lot of borrowers may have seen their accounts go into a forbearance this month due to servicer processing issues. This administrative forbearance will count towards PSLF, and you will see that reflected again later this fall when we run that final payment count adjustment.
Thank you, Rachel. I'm hopping in now. 1 second here. Okay. So if you are new to PSLF or you're just not sure where to start with everything, you're in the right place. That's one of the reasons that the Office of the Student Loan Advocate exists. We're here to support you in going through this process. And to start, we strongly advise that you go to our website and review our materials. Jessica, if you'll post our link to our website in the chat, and I'm actually gonna go ahead and switch my sharing so that I can show you all our website. All right. Can folks confirm on the panel that you are seeing the PSLF webpage for WASAC? Perfect. Okay. So this is the Student Loan Advocates Public Service Loan Forgiveness Program page. So here we've got a variety of information. So you all found our webinar, so you may have already seen our upcoming webinar section, or maybe you received notice from us. You can always come back and watch our past webinars. If you're not already on our email list, which actually I think everybody should be, because you get added to our email list just by signing up for our presentations. So you can do that there. Our portal to submit questions and complaints is also linked under this Contact the Student Loan Advocate. We have some general information about kind of timelines for PSLF and some of the specific things that have happened in the past and recently. So we've got the IDR count adjustment, the general PSLF rules, the previous waiver. We've got a section specifically devoted to Parent Plus loans and public service loan forgiveness. That's a question that often comes up. But down here, we have this, how do I apply for PSLF? And so we have a few links to handouts that our office has created. And we've got a fact sheet, that has some of this general information about the elements of the program. We have a sheet specifically on the individual steps to apply, So checking your current and past employers, identifying your loan types, and then if you need to consolidate, applying for income-driven repayment, and then using the actual help tool to submit PSLF forms. So we walk you through this process. So if you need a little bit more guidance and not sure where to start, this is a great place to come. And we also have a frequently asked questions document that, some of the questions, if you want refresher on what we might answer today, or if we don't address something that maybe is in our document, it's a great resource to check out. So please do take advantage of our resources. We create them with you in mind. So, and if you happen to be an employer, we do also have some resources for nonprofit and local employers, as well as for state agency employers. So a lot of great information. Please check it out. And with that, we do want to share with you something that our office right now is working to gather some information. So if you would like to help Washington State continue to address barriers and expand access to the public service loan forgiveness program, please complete this short survey to share information regarding your experiences and challenges in accessing the PSLF program. Our survey, it's only about 10 multiple choice questions, so it should only take you a couple minutes to complete. Maybe a couple, maybe is a little short, but a few minutes. You can use either the QR code on the screen to access the survey, and then we'll also post the link to the survey in the chat. We highly recommend that you submit the survey so that we can help better serve Washingtonians. So Jessica, if you'll put that in the chat. Okay. All right. And then here is just our reminder on how to upvote questions. And so now we're going to go ahead and start to dive into some of the questions that have already been submitted.
All right. I'll go ahead and start with the first question from Emily. If you have a payment outside of the scheduled monthly payments, would that count towards 120 qualifying payments? So I can go ahead and take this one, right? So basically, I think what your question might be is whether there's a way to get forgiveness faster by doing more monthly payments, right, than what you're scheduled to do. And the answer is no. Right? You could do more than one monthly payment to satisfy the amount that you have due. So for example, if your monthly payment is $60, right? If you want to do in that month 2 payments of $30 to satisfy the $60 that are due, you can, and that will count as one qualifying payment. But there's no way for you to make an extra payment that month to generate another PSLF qualifying payment. And the reason behind this is because the purpose of the program is to have you work in the public sector at least 10 years while making payments. So unfortunately, there's no way to speed up that process. You really can only make one PSLF qualifying payment a month.
All right, and I can pose the next most upvoted question. It comes from Ashley. Ashley's asking, I submitted a PSLF form for 3 employers and did not realize how short the period was for employers to sign and return. It was basically 4 days. None of my employers submitted it that quickly. It'll be very difficult for me to get signed copies. Can I reapply digitally again? And Rachel, I believe this, oh, go ahead, Amber.
Oh, I can take it, or Rachel, do you want to take it?
Sure. I can take it. This is an issue we are aware of, and I apologize. So yes, we are seeing this issue, especially with .gov email addresses. It is an issue with the DocuSign part of the form. We are working to resolve this as quickly as possible, but in the meantime, you can just resubmit that help tool form and then just alert your employers that it's going to shut off in a very quick period of time. But again, apologize for the inconvenience, and we are working to solve that as quick as possible.
And I'll just add on to that, there's no limit to the number of forms that you can submit via the PSLF help tool. I would say just, for a single employer, submit one first, see if it ends up getting processed, right, and submitted before you would submit another one. But you could submit forms again for all 3 of those employers, without any issue.
All right, and I can pose the next most upvoted question. Can you speak to the recent lawsuit against the SAVE program? I was told signing up for SAVE was going to be my best option, and now it's facing legal challenges.
Sorry. Yes. Hi, I can take that question. So yes, there have been 2 different decisions that have come down in recent days. The department is still working to analyze those decisions. However, they will not affect current enrollees or your ability to enroll in SAVE moving forward. It's just certain benefits of the plan. So the 4.5 million borrowers who are already getting a $0 payment through SAVE still have that benefit. And then moving forward, you will still have access to the income-driven repayment plan SAVE and many of the benefits. We are also pursuing appeals. We are still in the process, as I mentioned, of assessing the impacts of the rulings, but in a nutshell, you can still apply to SAVE and you can still get the majority of the all the existing benefits relating to SAVE and it being the lowest income-driven repayment plan up until this point.
All right, thank you, Rachel. And I'm gonna grab the next question here. So Mohila recently transitioned borrowers to a new online platform. Some borrowers have received notice from Mohila that loans have been placed in forbearance. I've had this happen, and I know another friend has too. Will payments continue to count for PSLF? So on the notices that you've received for what you're referencing, these most recent notices, a lot of them are related to SAVE, but that paperwork indicates that those time periods spent in that forbearance will still count for public service loan forgiveness, and that means you don't have to make a payment right when you're in that forbearance. So you wouldn't have a payment due during that period, and that month would still count towards PSLF even though there wasn't a payment. So you can continue to make payments if you would like, but no like auto debit should be taken out because you wouldn't have a payment actually due during that forbearance period.
And if I can just piggyback off of that, Amber, there's another question in the chat about the COVID-19 forbearance. So these are all what we call administrative forbearances, the COVID-19 forbearance, the forbearance that many of you were placed in because of the SAVE processing issue. And those, just like Amber said, that administrative forbearance does count towards PSLF. So you don't need to make a payment during those months in order to get that month. I can drop in the chat a list of frequently asked questions too on our website that talks through. So in general, any income-driven repayment plan, like Jessica said, counts. The standard plan counts towards PSLF, and then certain periods of deferment and forbearance count, administrative forbearance being one of those periods. So if you're in that administrative forbearance, don't fret. You will see eventually your payment count updated based on that administrative forbearance. Now, it won't be updated until likely later this fall because of the payment count adjustment. So if you don't see those payments count immediately, don't worry. Just check back later this fall and it should be updated.
All right, I'm going to grab the next question. We prepared for a question like this, so I'm going to jump to that slide here. Okay, so the question that was posed by one of our participants here is, how do I determine if consolidating my loans is best? I have undergraduate and graduate loans. I have more loans in graduate loans. Also, I'm recently graduated. So there's a couple of different situations right now in particular where consolidation could be really beneficial. Those situations, so one, if you have any FEL, HEAL, or Perkins loans, those loans generally don't typically qualify for PSLF, but if you consolidate those into a direct loan, then you could access PSLF for those particular loans. The other period, which this particular question does get at, is if you have loans that are in or have different periods of repayment. So if you had undergrad loans that you took out, right? Maybe that's for an associate's degree or a bachelor's degree. And maybe that was 2 years ago. And then you worked for the state in those 2 years. And then you went back to school, took out more loans for grad school. And then now you're at the point where you're past and you've graduated, but you've got these two different sets of loans that have been in repayment for different times. Right now, if you consolidate those loans together, and that means applying for that consolidation by June 30th, the payment history for that older loan would be applied for the new loan, right? So if you had PSLF qualifying payments for those undergrad loans, that might be a good reason to consolidate the grad and undergrad loans. I do believe you have to take, for those recent loans, you would have to be out of the grace period. And I can't remember if you can you can't take out, you have to wait to the end of the grace period.
No, I was gonna say that you can, if they just have to have graduated. If they're on their grace period, they should be able to apply to consolidate. It's just that if they're still in school status, they can't. But as long as they have reached their grace period, then they should be able to consolidate.
Just to clarify, that 6-month grace period after you graduate, you can't waive that. So as soon as that grace period is done, then you can consolidate. But, well, you can consolidate before it, but you won't be able to go back into repayment until the grace period is done. It's a standard 6-month grace period after you graduate. You can, however, waive in-school deferments for graduate school if your loans have gone back into repayment. So that is the difference. You just can't waive that initial in-grace period immediately after undergraduate.
And I'll add, so for folks that maybe have this situation where they have loans that have been in repayment for different periods of time, so consolidating before June 30th, those, like the highest payment count that it's eligible for would be applied to the new loan. After that point, it would be like a weighted average between the payments between the two different types of loans. So that's one of those benefits of completing that consolidation earlier than later, as in by June 30th.
Awesome. Thanks, Amber. I can take the next one here. Mia asked, do borrowers have to be W-2 employees to qualify, or can they be 1099 contractors? So typically, yes, folks have to be employees of a qualifying public service employer in order to qualify for PSLF. There is, however, an exception under the new PSLF rules that went into effect last June 2023. And that exception is really about state law. So if there's a state law that prohibits an agency from hiring direct employees to do the work that the contractors are doing, then those contractors do qualify for PSLF. So far in Washington State, we've identified that public defense attorneys with the Office of Public Defense do count as qualifying contractors. If you think you might be such a qualifying contractor, you can email pslf@ofm.wa.gov. We have directed agencies to work with their AGO's office preemptively to determine if there are such qualifying contractors in their organization. But again, if you think what I've seen the best advocacy come from is those individual folks reaching out and saying, hey, I think I might qualify. So again, if that's the case, maybe, yes, thank you, Jessica, for dropping the email in the chat, pslf@ofm.wa.gov. We can help you navigate that.
All right, and now I'll take the next question, which was asked by an anonymous attendee. Should we wait to start this process until August? No, there's no reason to wait until August, especially if you need to consolidate. Again, look at the slide that we just put out here. If you're in one of those situations, you definitely want to start the process of at least consolidating before this weekend, right? June 30th of 2024. But even if you're just talking about in general, if you should start completing your PSLF forms right now, you should, right? Like there's no reason to delay. There might be a little bit of you might have to wait a little bit for your form to actually be processed due to that pause, right? That Rachel talked about earlier, but there's no reason that you can't start the process now. And I would encourage you to start the process now if you're ready. So.
I can take the next one. There's a lot of questions in the chat about $0 payments and whether or not they count towards public service loan forgiveness. So as I mentioned, about 4.5 million borrowers currently have a $0 payment thanks to the new SAVE plan. And the great thing about the income-driven repayment plan, the SAVE plan, is that those payments, $0 payments, do count towards public service loan forgiveness. So if you have a $0 payment, you do not need to make a payment, and that month will count towards public service loan forgiveness.
I'm just going to throw a reminder out there. As you're looking through the questions, click that little thumbs up for questions that you want to upvote to help us prioritize. That way we can provide some semblance of order for our questions here. The next one that I'm seeing on my end is any advice for someone who signed up for PSLF when working for a state agency in a different state before moving to Washington. And for this one, I am actually going to pull up one of our slides here. Because I think this is kind of relevant, and this is a good reason why we recommend submitting your PSLF forms on an annual basis. Or anytime you change employers. So if you have employers that you worked for previously that you're no longer working for, I'd recommend talking to their HR to find out who their contact would be for signing a PSLF form, and then using that to go and fill out your PSLF help tool. But in general, we recommend folks submit their PSLF form every year, even if they're working at the same employer, because that allows your payment count to get updated so you can track your progress towards forgiveness, and you get to see the excitement that progress provides. That also helps to like when you certify, that's telling FSA and Department of Ed that you're still working for that employer, right? They don't update it without the new form because they have no way of knowing if you're still working for that same employer from the last form. So you want to get that form submitted. And certifying yearly allows you to identify any possible issues and resolve them early. For instance, if there happens to be a month that's incorrectly listed as ineligible, you can dispute it more recently versus 5 or 10 years down the road. It's a lot harder to go back and find documentation or things if there's issues. So yeah, that's kind of the note there is stay on top of doing your annual certification.
And you can always go back to an old employer and ask them to complete a form for you, right? So just because you were in a previous state, you can go back to them and ask them to complete the form. And even if they don't want to complete the form for you for some reason, there's still options for you to still submit the form and get credit.
I see one in the chat that I can answer. Someone did upvote this one. So Robin asked, I received an email yesterday from my Mohila servicer stating transfer was complete and I needed to create a new account and update my banking information for auto withdrawal. I thought everything was now being serviced through studentaid.gov. So this is a little bit confusing. So sometimes, a lot of times when loans are transferred, auto debit it's supposed to transfer with the loans, but it often doesn't. And so my recommendation is that if your loans are being serviced by Mohila, your loans would have been moved from one system to another within Mohila, but it still works the same as an external transfer. So I would go in and double check and make sure that your auto debit is still what it was, that it's still, you're still enrolled in auto debit. Then if you were transferred from Mohila to another servicer, you would have gotten a notification from your new servicer. And I would, again, just go in and double check that you are enrolled in auto debit, just because sometimes that does accidentally turn off during the transfer. Now, for the second part of the question, which is that the question about whether or not it's being serviced through studentaid.gov. So this is a little bit more complicated, but basically the servicers are still going to they're still going to do a lot of the same stuff that they do right now. It's the main thing that's different is the specialty servicing, which means that the PSLF counts and the processing of that PSLF form when you submit it, that's going to be done automatically through our new system on studentaid.gov. But the actual payment processing and your auto debit and your loan servicing more generally will still be housed at your servicer. So I hope that makes sense. And any of my colleagues can jump in if it doesn't. But basically, if you have your loans at Mohila, would highly recommend just double checking that your auto debit is still working as intended. And then especially if you were one of the folks that transferred from Mohila to Ed Financial, I'd also check that as well.
All right, so next question I see here. I am eligible for PSLF with about 8 years served. I don't benefit from IDR based on previous assessment. I've not consolidated my loans. This presentation makes me think that I need to consolidate before June 30th. Is that necessary for PSLF or to just get qualifying credits for COVID forbearance? So I would say there's two things here. So consolidation is not necessary to access PSLF. It benefits some folks, particularly if they have loans in different repayment time periods. If all of your loans were taken out at the same time, so in the same, let's say, 4-year span, if you were completing your undergraduate degree and they entered repayment together after you graduated, there may not necessarily be any benefit to consolidating because those loans maybe would have all of the same payment count. So you don't have to consolidate to access PSLF. The other thing is you also don't need to consolidate to get credit for the COVID forbearance. So you would just need to make sure that you certify your employment for the time period that you were in COVID forbearance for those months to count towards PSLF.
I just want to add a couple of things, right, to this answer. So the first thing is that obviously this only applies if your loans are direct loans, right? So if you have any FEL, Perkins, or HEAL loans, and your plan is to get PSLF, there's no question about whether or not you need to consolidate. You need to consolidate, right? So I just want to make that clear, just in case for some reason you have one of those loans. I'm thinking not, since you're saying that you think you're eligible for PSLF, but double check to make sure that all your loans are direct loans, because that's probably the most important piece when it comes to the IDR account adjustment and to benefit. The other thing to be aware of is that if you're currently not able to benefit from an IDR plan, meaning that you went on the website and you tried applying, and it looks like all of the monthly payments under that are going to be higher than you either can afford or higher than what you would pay on the 10-year standard repayment plan. One, you can always stay on the 10-year standard repayment plan and continue making those payments, right, to eventually get PSLF. Another program that we didn't talk about, we didn't mention today yet, is the TEPSO program, which is a temporary extension of the Public Service Loan Forgiveness Program, which is a program for people that have been basically satisfying all of the requirements for PSLF, except that they haven't been in an income-driven repayment plan, right? It is possible for you to get forgiveness under that TAPSO program, even if you stay on a payment plan that is not the 10-year standard repayment plan or IDR. The issue with TAPSO is that there's no deadline as far as like how long it's going to be available. It's only going to be available as funding is available. So we can't guarantee that, if you've been working for 8 years, that in 2 years that opportunity will still be available, right, for you to get your loans forgiven. So in your situation, I would recommend that you, one, check it to see if the 10-year standard repayment plan is something that you can afford. And if that's not an option and IDR is not an option, then you can continue making payments under other repayment options and potentially get TAPSO. Just know that it's not guaranteed at that point that it will be available.
All right, I can pose the next most upvoted question, which is, I understand PSLF will make 120 qualifying payments under a qualified employer and you receive loan forgiveness. I'm a little confused around consolidation though. Is it just required for IDR and or SAVE? And I know that we just spoke a lot about that, but does anyone want to speak to the IDR versus SAVE portion?
So just to reiterate what Jessica said, you need to consolidate if you don't have direct loans, and you need to do it before June 30th to gain access to the payment count adjustment, which we talked about briefly at the beginning. Basically, we're having a one-time program, a one-time audit, if you will, of all of your past payments if you were on an either not qualifying loan or a not qualifying payment plan. So not qualifying loans, like Jessica said, are FEL, HEAL, Perkins loans, anything that doesn't say direct before it. Not qualifying payment plans include graduated, extended, alternative, or if you made a partial payment. Those also didn't count historically. So if you have any of those in your history, then we'd highly recommend consolidating before June 30th, this weekend, in order to make sure that you get all of that past credit through this one-time payment count adjustment. The other time consolidation is really helpful is if you have loans on different tracks. So this is like if you took out undergraduate loans and then you went and worked for a couple of years and then you took out graduate loans. Those loans are going to have 2 different payment counts. And so during this payment count adjustment, we're going to basically give you the larger payment count, when you consolidate those loans together. Another example of this is if you had your own undergraduate loans and then you went back and took out loans for a child, Parent Plus loans, right? Those we would highly recommend consolidating together. You do not need to consolidate to gain access to the income-driven repayment plans, though, as long as you have a qualifying plan. And you, yeah, I think that answers the question, but feel free. I know that this is really confusing, and we can also put another, we can drop another link in the chat to talk about the payment count adjustment. It is a one-time program though. So the main thing is if you have those FFEL loans, those Perkins loans, those HEAL loans, or if you have loans on different timelines, we would highly recommend consolidating as soon as possible in order to maximize your payment.
And I went ahead and posted the link once again to the IDR payment count adjustment, right? So that if you really want to know all the nitty gritty, actually the Q&A section of that webpage that I just posted is really great, also into like answering more specific questions. So highly recommend that you look into that if you have more questions specifically to the payment count adjustment.
And I just wanted to add a quick note. I got a Teams message from somebody, and I think it's a relevant question. How do folks know if they have FFEL, HEAL, or Perkins loans? And I would say the best way to find out that information is to log on to your studentaid.gov account and take a look at both your loan servicer and your loan details. If they are direct loans, right, which are the loans that are eligible for all of the things, they would say direct loans or DL. If you have loans that are FFEL, Perkins, or HEAL, they'll actually have those abbreviations or those names attached to the loans. And that information might be on your servicers as well, but I know for certain it's on your studentaid.gov.
Yeah, and I'm going to go ahead and post again our steps to apply for PSLF document, because in that document, there's step-by-step instructions on how you can find out what kind of loan you have, right? Like it shows you screenshots where you have to click, so it makes it more foolproof so that you are not confused about how you can find out that information.
Awesome. Thanks, Jessica and Amber. I can take the next question. David asks, I have a past employer who said they no longer have a record of me. It was about 15 years ago. What might be other ways to prove this employment? So let's see. Amber, if you could go to slide 22. We did prepare for this question. So as I had mentioned previously, this is one of those circumstances where it's probably your best idea to submit a manual PSLF form. This would also apply if your employer no longer exists, or closed doors, or if you're having difficulty having them if they say they don't have a record of your employment. So in this case, you can complete a manual PSLF form. You can check the box at the end of section 4 on the PSLF form. There's a screenshot on this slide that shows you what it looks like. And then you would go ahead and complete section 5B of the PSLF form. If you check this box, you will be required to provide additional information that supports your employment. So if you have your IRS W-2 form for every calendar year that you're employed with them, include that. Pay stubs would also be a valid documentation or proof of employment for that time period. During that time period, you will need to have met the other program requirements, so working at least 30 hours a week while submitting qualifying payments on your student loans. If I didn't note it already, which I don't think it's on the slide, the PSLF program started in October of 2007. So you're able to go ahead and certify your employment, whether it's by having your employer work with you or by taking that manual process and submitting proof of employment during that period back to 2007. Before that, unfortunately, the program was not around, so we can't certify past employment beyond that 2007 mark, but that is an option to be aware of.
And Katie, I do want to also mention to people, because sometimes people no longer have, potentially 15 years ago, the person might not have those W-2 forms anymore. There is a way that you can request copies of those from the IRS. So just be aware of that it's like, if you don't have those, you should be able to request a copy. So just keep that in mind.
And since Katie brought up the start of the program in 2007, I wanted to take that opportunity to answer another question in the chat, which is, does it have to be at the same employer or consecutive? I know I've seen this a couple of times in the chat, and the answer is no. So you can, it just has to add up to 120 months. So if you have 120 months over the course of 15 years, that would still qualify. If it's at multiple employers, that would still qualify. It just has to add up to 120 qualifying payments at a qualifying employer on qualifying loans. There is another type of forgiveness that we've talked about a little bit today, which is income-driven repayment forgiveness. And so sometimes, and someone else asked this in the chat as well, which is that you can be working towards both simultaneously, and you will get whichever comes first. So let's say you started working in at a public service loan forgiveness in 2007. You worked for 5 or 6 years, and then you left that public service loan employer. You may not be eligible for PSLF unless you work more time at a qualifying employer, but you would be eligible for the income-driven repayment plan at either 20 or 25 years after your loans were taken out if you're enrolled in an IDR plan. So basically, the two types of forgiveness are not mutually exclusive. You can be working towards both at the same time, and that PSLF time does not need to be consecutive or at the same employer.
Thank you, Rachel, for reminding us of that. So there's a question by Anonymous that has been uploaded a couple of times that it says, I'm currently looking on mohila.studentaid.gov and I don't see anywhere where my payment counts can be seen. Do you know where I can see my payment counts at? Do you want to answer this one, Rachel?
It's not live yet. It is, we are hoping it should be live in the next couple of weeks. You should be able to see them on studentaid.gov later on this summer. So we are hoping to turn on that automatic processing next week. And then it'll take a little while for your counts to be updated. You will not see the count include the PSLF processing pause. So it'll be your count based on, I think, April. And then and then your counts will be updated later in the fall. So basically, it's not live yet. Check back on studentaid.gov later this summer, and you will see your counts there.
And I'm going to add to that real quick because this person specifically said mohila.studentaid.gov. And so there is a difference between mohila.studentaid.gov and just studentaid.gov. So mohila.studentaid.gov is specifically your new access to your loan servicer, which is Mohila, right? That's where you can do your auto pay and payments and those sorts of things. Studentaid.gov is now where your PSLF information is going to live, and that's through federal student aid. So this is where there's like two different things that are happening, so that there's that platform transition, so that instead of going to mohila.com, you're going to mohila.studentaid.gov to pay for your student loans and access your loan servicer. Studentaid.gov is the greater Department of Education federal student aid account. And that's where you would submit your PSLF forms, your IDR applications, access to see your progress towards PSLF once it's live, and those things.
I see one that has been upvoted as well that I can take. The question is, if one has met all the criteria though payments were made through garnishment for 10 of those years, now out of garnishment, made regular payments in the SAVE program, do the prior payments through garnishment count? So unfortunately, if your loans were defaulted and your wages were being garnished, that period in default does not count towards PSLF. The period that you made regular payments through a qualifying payment plan does count towards PSLF. And this actually, unfortunately, we can't do anything backwards, right? But moving forwards, this is one of the great benefits of the new SAVE plan. When you are, if you are not making a lot of money or if you are out of a job, historically, there has been something called, there is an unemployment deferment. There's an economic hardship deferment. Those periods sometimes count and sometimes don't count. The SAVE plan gives you another option so that if you were to lose your job or if you were to have a massive change in your income, you can apply to the SAVE plan and you can get that $0 payment. And that always will count towards public service loan forgiveness and income-driven repayment forgiveness. So if you have a change in your income, if you lose your job, we would highly recommend applying for that SAVE plan so that you can still make sure that those payments count towards those forgiveness programs.
Awesome. Thanks so much, Rachel. I just wanted to let you know that I have to hop to another meeting, but thank you all for being here today. And thanks so much for your question.
Thank you, Katie. We appreciate you.
Okay, there's a follow-up question, and Rachel, I think it's for you. Will our counts be updated with the one-time adjustment when it goes live, or will we have to wait for that to update as well?
That's a great question. So we're going to turn on this automatic processing next month. We're going to turn on that ability to check your payment counts on studentaid.gov next month. That final payment count adjustment will be happening later this fall. Now, the only caveat of that is if you've hit 120 during the pause since April or in the next few months. So we will be running regular public service loan forgiveness files over the course. As soon as we turn back on processing, we'll start processing some of those borrowers who have hit 120 qualifying payments. If you're at like 90, you will see your count as it was in April 2024, as early as next month, hopefully. And then you'll see it jump with the most recent pause and any administrative forbearances. You'll see that once we do the final payment count adjustment in the fall. This also matters if you have periods of forbearance in your past, or if you, for example, consolidate your loans before June 30th. You will see a temporary, if you consolidate your loans before June 30th, your payment count will temporarily be reset, and then it'll go back up to that highest number when we run that final audit later in the fall. So don't fret if your numbers aren't accurate before like October of this year. We might have a slide on this, right, Amber? We might want to pull up the slide on this.
Yeah,
One second here, I'm trying to see which number it is.
No worries.
And I'm trying to search too so that I can help you.
Oh, I got it. It's 24.
Perfect.
Just say,
So,
I think I got everything, but just in case not.
No, I think you covered everything, right? We do want to give enough time for everything to basically be processed, right? So I will wait a little bit after the payment count adjustment is completed, and then you're going to be able to review that information of your payment counts on the studentaid.gov website again. The other thing that I recommend that you confirm, right, if you are still seeing at that point in time that your payment counts are not accurate, that you make sure that you have submitted all the PSLF forms for all the employment that you have had, right? All the way back. I tell people all the way back into October 2007, just so that you can be extra sure that you're not missing anybody. But really, really you want to go back to when you first enter repayment on your loans, right? So make sure that all of those forms have been submitted. And then if for some reason you're missing a form, submit that, because that could be the reason why you don't have qualifying, some missing qualifying payments. And then finally, if you've done those two steps, right, review your information on studentaid.gov to understand a little bit more about why certain parents may have counted versus others, and you are sure they've submitted all your PSLF forms, then at that point in time, I would recommend that you submit a question or a complaint directly to our office, right? And you do that at studentcomplaints.wa.gov. So hopefully that gives you a rundown of things to keep in mind, and how to kind of troubleshoot, and if you're not able to, who to reach out for help.
There's another question in the chat that I can take. Now I lost my chat. That's been upvoted, which is, if your loans are being deferred due to seeking a higher degree, does the period of time you're on deferment count towards PSLF as well? And the answer is no. But if you are in graduate school and your loans have returned to repayment previously, which means that you took a break between undergraduate and graduate and your loans went back into repayment or were eligible to go back into repayment, you can waive that in-school deferment. And many people in graduate school aren't making a lot of money, so apply for that income-driven repayment plan, save, and get a lower dollar payment plan, and that would be eligible for PSLF. So in general, in-school deferment's not eligible, but you can waive that if your loans have gone back into repayment and apply for an income-driven repayment plan.
I just want to add one caveat to that, Rachel, right? Is that it's important for you to know that if you do that, you're only waiving the in-school deferment for the previous loans, not for the loans that you're taking out for your current degree, which means that you're going to have separate repayment histories for each set of loans, right? Your older loans are going to have more qualifying payments towards PSLF, while your newer loans that you're taking out to go to school, those are not actually going to enter repayment until after your grace period. So just keep that in mind, right? That you're going to have potentially some loans that are forgiven faster than others. So, and then there is a question that I think 3 people have upvoted, so it's something that everybody wants to know. And it says, does my spouse's income have to be considered when wanting to qualify for income-driven repayment plan? Amber, do you want to take that?
So the answer is it depends. At least the succinct answer, and that it's more complicated, right? So essentially, it depends on your tax filing status. So if you are filing as married, filing jointly, then yes, your spouse's income has to be considered, or your household income. If you are doing married filing separate, then that it changes the situation, and it does then consider your individual income. But it's also a little bit more complicated depending on if your spouse also has student loans, right? So there's kind of some complications to that. I've got an article from FSA that kind of talks a lot about some of the things to know, I guess, about marriage and student loan debt. But this is a situation where we definitely would recommend that you check in with your tax person as well, because changing your tax filing status can have other implications beyond just calculating student loan payments.
All right. So it looks like the next most upvoted question is, if I have consolidated income-driven repayment plan, can I change it into a save plan? If so, how does this affect the PSLF 120 qualifying payments? So if you are in an income-driven repayment plan right now, that is not the SAVE. So for example, you might be in income-based repayment, you might be on the pay-as-you-earn repayment plan, or you might be on the income contingent repayment plan, and you want to switch into SAVE. Assuming that your consolidation is a direct consolidation, right? Then you should be able to just switch into SAVE, right, with no issues. And I can post the link to the income-driven repayment application that would allow you to do that on the studentaid.gov website once I'm done answering this question. But whether it's going to affect your PSLF qualifying payments, like the number that you have accrued so far, no, it will not. And if you are on the SAVE plan, as long as you continue working in the public sector, right, then you should be able to continue accruing PSLF qualifying payments. So it's not going to impact anything that you have accrued so far, and will also continue qualifying in the future. Thank you, Rachel. Rachel already posted the link to the income-driven repayment application in case you want to switch to SAVE.
Jessica, the next one is downsides to consolidating loans. I'm going to pull up your slide here. You're on mute, Jessica.
Oh, I was saying what slide number that is? And I want to make sure that I answer each one of these questions individually, right? Because the person did ask more specific questions. Have to reapply for IDR plan. Yes, you will have to reapply for income-driven repayment plan once you consolidate your loans. And the reason for that is because you have a new loan, right? New loan means that you have to reapply for IDR. So for some people, if their income has increased, it could potentially mean a higher monthly payment, right? But do know that you're going to have to reapply. And you know, it could have some impact on your monthly payment depending on the documentation that's used, right, to document your income. The accrued interest on the loans would be added to the principal balance. The answer is also yes, right? Whenever you consolidate, any interest that has accumulated on your loans will be added to the principal balance, right? And then the person says, so if a borrower is not sure if they will stay in public service to qualify for PSLF, then adding the interest to the balance may not be a good idea if you have huge loan balance, like 150K, right? So Kelsey, I am going to say we're not financial advisors or counselors here, right? So I can't say whether or not on your individual loan balance, it makes sense to do a consolidation. What I can say is if you're planning on staying on public service, in getting public service loan forgiveness, a lot of these downsides don't count because what is going to get forgiven after you make 120 qualifying payments. It's whatever the balance is at that point in time, right? So accrued interest and principal balance increasing is not too much of a concern if you're going to get PSLF eventually, because whatever the balance is at that point that you make that 120 qualifying payment is going to be wiped out, right? Now, if you have some concerns about not wanting to stay in public service, right? If you're considering that, then it is possible that in your specific situation, it might not be beneficial for you to consolidate. But again, your question is more of like a financial counseling question versus a general student loan question. So hopefully I've given you enough information that you can make a decision. Thank you.
And great response, Jessica. But the one other thing I would add to that is if your loans have been in repayment for close to, or if you're not going to stay in public service loan forgiveness, but your loans have been in repayment for 20 years for undergraduate loans or 25 years for graduate and Parent Plus loans, and you would be eligible for income-driven forgiveness either now or in the next few years, then most of these downsides also will not apply to you, right? So as we mentioned, there's those multiple routes for forgiveness. And so it's in addition to PSLF, also if you're on track to reach IDR forgiveness in the imminent future, most of these downsides will not apply to you either.
The next question is for Megan. Washington is a community property state. If we married file separate and my spouse makes more, how do I get my actual income considered? So this to me sounds like a tax question, Megan. I think you need to talk to a tax professional about this. My understanding, right, is that if you're married filing separate, only your spouse income should be considered, right? If for some reason the tax return your tax return doesn't reflect that for some reason, even though you're filing separate, then you might be able to give some extra information to your servicer, right, to document what is just your income. But this, like I said, this sounds like a tax question to a tax person. So unless one of my colleagues have more information on that.
No, I was just going to add that this is also, it's not based on Washington state law. Unfortunately, it's based on the federal regulation and the federal income-driven repayment regulation. So the IDR plans are set based on that federal regulation. And so that's what determines, how we are going to calculate your payments. But as Jessica said, if you're married and filing separately, then only your income should be taken into consideration when you're applying.
All right, so the next upvoted question I see here, my loans say direct subsidized and or unsubsidized. There are so many random terms being used. Do I need to do anything to mine? So in that instance, so again, if they say direct loans, those are direct loans that can access PSLF and they can access the income-driven repayment plans. In those instances, if you only have direct loans, whether or not you would need to consolidate really, and again, it's not need to consolidate, but want to consolidate, the benefit to doing so is if you have loans that were in different periods of repayment. Again, if all of your loans were taken out and entered repayment at the same time, you can consolidate or not, it's not really going to make a difference. But if you do have some loans that you took out early and then you worked in PSLF qualifying employment, and then you took out more loans, that's an instance where it would be beneficial to consolidate before that June 30th deadline. Jessica, you're muted.
Sorry, thank you. Thank you for letting me know. So Elise asked, if I have been working at my job for a year and sign up for PSLF today, will my last year of payments count towards PSLF? The answer is yes, Elise, they will count, but you have to submit that PSLF form that we've been talking about, right? So you can do it through the PSLF help tool, which is typically what we recommend that people do, or you can submit a manual PDF in or paper form, right, to the Department of Education. But what you want to make sure that you do is do that form, because otherwise there's no way for the Department of Education to know, right, that you've been working for the last year at this new job. And then what you want to make sure that you do is that every year moving forward that you are submitting that PSLF form, just to make sure that you are documenting those additional qualifying payments that you've been making.
I lost track of the question, but I saw it related to consolidation. So you get the benefits of the payment count adjustments. You just would, like, for consolidation purposes, you would need to consolidate by June 30th. That means just submitting the consolidation application. It doesn't mean that your loans have to be fully consolidated by that point. It's just submitting that application, because that actual consolidation process takes about 6 to 8 weeks.
I think everyone's upvoted the same amount of time, so I'm going to jump to a question we haven't answered yet, if that's okay. Which is, someone asked in the chat about the PSLF buyback. So this is under the new PSLF regulations. There is an opportunity that has been introduced called the buyback. The buyback is basically if you have an outstanding amount on your loan and you have periods in your past that could have been in repayment, but were not in repayment for some reason. So like there was a forbearance or deferment, but they were eligible for repayment. And by having those periods in repayment, you would hit 120 qualifying months. We are giving you an opportunity to buy back those months where you would make a payment for those months and get that qualifying month. This program has gone live. However, we would highly recommend waiting until that final payment count adjustment is run later this fall to be able to determine what your actual count is, to see like what you're still missing. And I should also add that after we're done, we're doing this automatic payment count adjustment, right? This automatic audit, as I've mentioned, and we're counting large periods of forbearance. So if you have 12 months consecutively or 36 months cumulatively in different types of forbearances, we're going to count those. But if you have shorter periods of forbearance that don't add up to those 36 months cumulatively, there's going to be, after we do that automatic payment count adjustment, there's going to be a manual payment count adjustment. So really the buyback, although it does exist, and I can put the link in the chat as well so that people have it and they can read it. It does exist. It is an opportunity for borrowers. We would really highly recommend that you wait until that payment count adjustment is done so that you're not buying back months that would be counted under the payment count adjustment. Jessica, you're nodding your head, but if you have anything to add, please jump in.
Oh no, I that's a great question. That's a great advice in the terms of like waiting, right, to buy back, because you don't want to buy back months that you're going to get counted anyway, right? Like that doesn't make sense. The other thing that I just want to highlight about the buyback program, that it does have some limitations, right? So you can't buy in-school deferment, because like that's probably once the buyback option became available, probably one of the most, like the questions that I got a lot from borrowers at that point in time was that you can't buy in-school deferment, you can't buy periods of bankruptcy, and I think also the default, right? Those are primarily the 3 periods of time that you can buy back. There isn't, currently at least, there isn't an option to do that. So just keep that in mind.
I think grace periods are the only other one that you can't buy back.
And there's one caveat with in-school deferment I dare bring up, but it's if you were eligible for repayment, by regulation, you are allowed to buy it back, but most people are not eligible. Most people are not going to be eligible. So there are like some very slim instances where you might be able to buy back that period, but largely you won't be able to.
Thank you, Rachel. And then I just want to remind people, right, we only have about 9 minutes here to go. So, and we have about 26 questions remaining. We're unfortunately not going to be able to go through all of these. So I just want to get people the reminder to please go through the questions, upvote the ones that you really want answered so that we can really know what is it that you want answered, right? Because right now, like Rachel said, there's only one upvote per question, and we're going to try to give priority maybe to the ones that we haven't answered. But if there's something you really want answered, go ahead and make sure that you upvote that so that we can get to it. But other than that, I'm going to move on and, take a question from Jenny that says, the SAFE plan states that any undergraduate loan balance that remains after 20 years and any graduate balance that remains after 25 years of qualifying payments will be forgiven. For an undergraduate, does this mean the person makes 20 payments for 20 years? I was under the impression that 120 qualifying payments were approximately 10 years. So Jenny, you're confusing 2 different types, right, of forgiveness. So there is PSLF forgiveness, which takes public service loan forgiveness, right, which takes 10 years, you're right, roughly, of payments, 120 qualified payments. And then there's income-driven repayment forgiveness, which SAVE is part of, right? And that's what takes longer, the 20 to 25, right? So if you're pursuing public service loan forgiveness, it should only take you 120 qualifying payments to get forgiveness. You could be on the SAFE plan, making payments under the SAFE plan at that period of time and still get forgiveness on those 10 years, as long as you're working in a qualifying public employer. But that's what I think is happening here. Is you're confusing IDR forgiveness with PSLF forgiveness. And yes, you can be on the SAFE plan, making payments under the SAFE plan while you're working towards PSLF. But it does not mean that because you were in the SAFE plan, it's going to take 20 years, right? It's going to take 10 years, as long as, again, you're continuing to work in the public sector.
I've seen a couple of questions related to payment plans and which plans qualify for PSLF. So the 10-year standard repayment plan is a qualifying PSLF plan. Of course, if you were on that plan for 10 years and consistently made payments to that plan, you would have all of your loans paid off before you would receive forgiveness. But if you had time periods previously where you were on a standard repayment plan and then you switched to IDR, those previous periods in standard repayment would typically count for PSLF as long as you had the qualifying public service employment certified for that period. Also, because of the payment count adjustment, if you were on some of the other payment plans previously, right, so the ones that didn't typically qualify for PSLF due to the adjustment, those periods would essentially be counting towards PSLF, but they wouldn't in the future. So if you're not now currently on an IDR repayment plan or the standard 10-year plan, you would want to go ahead and submit an IDR application to get on one of the plans or the 10-year standard repayment plan.
And just because someone else asked a similar question in the chat about what the difference between an income contingent repayment plan and an income driven repayment plan are. When we say income driven repayment plan, there are actually at this point 4 different repayment plans that count as one of those plans. So it's that new SAFE plan we've been talking about, Pay, which is the previous income driven repayment plan, an income contingent repayment plan, and an income based repayment plan. For your purposes, basically what this means is there's different ways that we calculate your monthly payment based on your family size and income. But all 4 of those income-driven repayment plans do count as qualifying repayment plans.
And you can find out what your payment would be under each of these plans on the studentaid.gov/IDR application. So if you're wondering that, because a lot of people have questions about that, like how do I know which one is the best for me? Typically, if you're pursuing PSLF, whichever one is the lowest IDR that you can qualify for is typically what's going to give you the best bang for your buck, you could say, like get you the most forgiveness. And what that's going to be for each person, it depends, right? Most people say tends to be the most affordable repayment plan, but you can check for that, right? By going to the studentaid.gov/IDR application and finding out for yourself. So
this is a question I think is a good one. All these changes are incredibly hard to track and make sense of. I know you have a website for us to utilize. However, do you have a resource on your website that can direct us so we can track all these changes related to SAVE and PSLF? On our Office of the Student Loan Advocate website, we do have an announcement section that we try to keep up to date, just as much as you know, you all maybe get confused by the announcements. We're always still trying to figure out what's happening as well. So, you know, we can't guarantee that we have hit everything on there, but we do try to keep that information as up to date as we can. I would say check your email frequently, check your messaging from your servicer, any emails that come from the Department of Education. There's a lot of great web pages related to, you know, public service loan forgiveness. Like you could bookmark those and come back to them. So we know that it's hard to keep track of this information, but do keep asking questions and reaching out for support and checking back for resources.
And the other thing that I want to make sure that we make it clear, right? On the announcement section of our webpage, we don't put every single update to federal student loans, because quite honestly, if we were to do that, that would be my only job is updating that section, because things are changing all the time, right? But whenever there's a major update, right? And it's official because technically the stuff that's happening to Save right now, they're injunctions pending actual decisions, right? That haven't been made yet, right? So it's like, and it's official. We typically will post that information there, right? So I would say that that's a great way to keep updated on major things that are happening with student loans.
All right, this next question, why doesn't the IRS automatically connect with studentaid.gov? Rachel, do you want to dive in?
I can take this one. So first of all, there are parts of the studentaid.gov website that do automatically connect. So this is one of the great parts about our new Save IDR plan is that we have a new IDR application that does have a tool that you can automatically connect with the IRS portal, so that someone else asks this question in the chat as well, so that you don't have to annually recertify your income. So if you are on an income-driven repayment plan, you have to recertify your income every year just in case it changed or your family size changed. But if you automatically, or if you enroll in that IRS tool and you grant access to the IRS, then we'll just pull that information every year and you won't have to report any income change. The employment side is a bit harder because we're asking the employers to certify that it's a qualifying employer, and if it's a nonprofit, that you're doing a majority qualifying service. So it's not as simple as like pulling W-2 forms from the IRS. It's a little bit more complicated, and that's why we ask for that employer verification. I know it feels laborious, and I'm sorry that it is, but unfortunately, that's why we ask the employers for that.
All right, so it looks like that we're at time here. So I just want to remind people of a couple of things, right? So if for some reason you have a very specific question about your situation, or maybe you have a complaint against your student loan servicer, my recommendation would be that you submit a question or complaint directly to us, the Office of the Student Loan Advocate. And the way that you do that is by going to studentcomplaints.wa.gov. Again, that's studentcomplaints.wa.gov. And I'll have Amber go ahead and post that link on the chat again, just in case you have a very specific question that wasn't answered today. You can use that as a resource to get your questions answered. And then I just want to remind folks one more time about our survey, Amber. So if you can go back to that slide. So we are trying to gather feedback, right, from you as Washington State borrowers about the barriers that you have to address to get PSLF, and basically ways that we could try to make the process easier on you, right, to get PSLF. And again, within the state, right, we can't really change the federal rules, but we might be able to do some things within our state to try to make the process easier for you. So if you could please complete the survey, we would really, really appreciate it. Like, we really want your feedback because we're in the process of creating an initiative to increase awareness and access for PSLF throughout the state of Washington. So you can help us by completing the survey. Again, you can use the QR code on the page here. And if you've never used the QR code, you use your phone, you scan it using your camera, and then it should pop up that link there. But if that's too tacky for you and you just prefer to do an old-fashioned link, we also have that in our chat right now available for you, so that you can click on that. And again, share your feedback so that hopefully we can continue making the process for you to get PSLF easier. Okay, thank you.
And I just shared both the link to our student loan questions and complaints form. There were definitely some questions in there that I would encourage those folks to fill out our form for assistance. And then also the link to the survey is now in the chat. I'll go ahead and stay in the Zoom for another minute just to make sure folks have access to those links. And again, in about within a week or so, roughly, we're going to try to have this recording and sent out registered for this event. So thank you all for attending. Special thank you to Rachel joining us from Federal Student Aid. And, you know, hopefully we'll be able to do a forum like this again in the future. So thank you all and have a great day.
Thank you, everyone. Really appreciate your attendance. And again, we'll stay here a little bit longer just to make sure that you can access the link in the chats. Thank you.